Hello everyone, my name is Gregory Schnese and let's talk about Bitcoin Borrow Die. As always, these videos are for educational purposes only. They are not financial or tax advice. This week I want to cover the big options expiration date on December 26th. Been hearing a lot about it on X and it's keeping Bitcoin in a relatively price bound range. So on December 26th, the day after Christmas, we have about $23.8 billion worth of options that are expiring, and we're going to dive into that in this video. So what exactly happening on the 26th? There's about 23.8 billion in notional Bitcoin option contracts expiring. This is approximately equivalent to 200,000 BTC in open interest, and this is the longest expiration event in history so far. And this is really due to monthly, quarterly, and yearly dates all kind of aligning together on the 26th here. And this really shows a lot of the Bitcoin price action lately. And then why this matters. So from the pre-expiry dates, there's just been all this gamma squeezing and pinning, which is basically people just trying to hedge and keep Bitcoin in a specific range for the market players, where they don't want the price to go up really high or low. And then afterwards, after all this expires, the gamma squeeze and pinning removes. So we should see a much larger volatility spike. This could be anywhere between like 10 and 20% within a few days after the 26th. So a lot of fireworks here towards the end of the year. And then with year-end trading, with reduced market participation, and especially with holidays, little bit of price demand could really swing the market. And then this is kind of just looking at the setup and what is coming. Again, we covered about this, like 23 billion in value, about 200,000 contracts, and the call to put ratio is about 1.1, so it's tilting more bearish, people really hedging the downside. And then I really like this max pain, where if we land at about 100 to 102,000, a lot of these options expire worthless, which is kind of what market makers want because they're just collecting the premiums on it. But then when the calls all expire, there will be less squeezing, and then we can see the price kind of return. And then just looking at sort of the gamma pinning and what is kind of keeping Bitcoin in this range, it's basically just all these date periods where we've been just in this range for 95K to 90K, kind of going down. And then just despite the macro tailwinds, price has failed to sustain breakouts. There's a lot of reasons for that. It's all this hedging, the flows neutralize most of the upsides, just kind of creating frustration from momentum traders, and it's really pulling out volatility from the market. And then this is just kind of like where the options are clustering and where the max pain and the pain points are. So right around 100K for the calls. This is the biggest wall so far, biggest net short for dealers. And then the second largest cluster is about 120,000 for calls. And then we see 85K to 90K puts, just heavy downside protection. And this skew is, again, a little bit more on the downside, so paying more for downside protection. Just the hedging asymmetry. Investors overweight downside puts relative to call volume, suggesting unease despite macro optimism. And this is kind of why we keep getting such good news about Bitcoin, really over the whole year, but especially in Q4 here, and limited price action. And then after December 26th and these options expire, what should we see? Especially during a holiday and kind of like a thin trading environment, a lot of volatility should return and a lot of uptick. So for the bull case, the call walls expire worthless. Dealers buy back their shorts and then push the price back up towards the end of the year and then in the start of next year as well. And then for the bear case, if liquidations trigger cascade, we could see further downside pressure. And then for Bitcoin borrow die, conservative borrowers, again, really always maintain your LTV. The lower, the better. We want to be overly collateralized. Look for the dips. DCAing is a great opportunity for places to purchase. And then, of course, like set alerts on Margin Watch and other tools to keep an eye on your LTV. And then just some key takeaways again. So about 24 billion in options expired December 26th. That's really the big day. Price can be anchored to around 100K. That's the max pain. And we should see volatility and kind of price action resume after this date. So that's just kind of what I've been seeing on X. Wanted to take a deep dive of this. I put this in our weekly newsletter as well. If you have any comments, put them in the area below and reach out if you have any questions.